Do we see Brent sustainably holding over 70 on this?
Hey, good to be talking to you too. So yeah, I think on Brent, we do see these political tensions remaining for now. I don't think I mean, I know everybody's been talking about de-escalating, but I don't think you're going to necessarily get that anytime soon. The physical market is still tight. You know, inventories are low. Spare capacity is also very, very low. So I do think there is going to be support for prices at these levels. I'm not necessarily sure that we're going to continue to get an upward move from these levels, but I think we should hold.
Well, fair point. And I was interested in sort of what was happening to the curve, because on Friday, NYMEX crude oil swaps for 2020 have leapt up also above $60 a barrel. That was where they were before. That was higher than what we saw back in May when the Saudi oil facilities were struck. Is that the correct market response for something like this?
So I think the big difference is that the market is starting to price in the probability or the risk of a war, which we don't think is likely to happen. We do think Iran is far more calculated than the market fears. It's going to mainly consolidate power in its own country and regionally. The focus very much is trying to expel U.S. troops from Iraq. See, for us, the main impact of this is long-term. It's, you know, foreign workers being pulled out of Iraq. It's long-term Iraqi oil production that's really at risk rather than short-term. Whereas with Upcake, you actually lost short-term production, even though, of course, Saudi Arabia were quick to manage exports through other means. I think that's the big difference. So this can or should really impact the back end of the curve. Mm-hmm. You should see deferred spreads and the flat price at the back being, or that's where the investors should really start to look into. That's the impact from the current events.
So on that point, do we see then U.S. producers, for example, start hedging? Do we see leveraged E&Ps on Friday really outperformed? What's going to be the response mechanism?
I think that's exactly right, and we've started to see that already. So one of the reasons why the curve is starting to get more backward is that you've got the speculative community buying the front because of all these geopolitical tensions. But we've seen a pickup in 2021 hedges by U.S. producers. So they are selling the back. So as a result of that, the backwardation is also increasing. And I think you're going to continue to see that because obviously, like you said, the curves moved above 60, and that is something the U.S. producers always utilize and hedge.
Well, I'm like that you brought up the steeper backwardation because one, you could look at it as you were discussing as sort of what the U.S. producers are doing versus what speculators are doing. The other is more fundamental. Goldman Sachs talked about this in a note this morning, said that the steepening backwardation can be interpreted as the market immediately and preemptively pricing in an outage of 800,000 barrels of oil a day for 3 months, or 30% chance of much larger 2.7 million barrels a day outage for 3 months. They are very skeptical that could happen. They think that the market is sort of overdoing it. What do you think?
No, I mean, that's our view as well. Look at the physical market, like I was saying, there hasn't been any disruption, and we don't believe there will be a disruption of a big magnitude because of what's going on. This is very much about long-term supplies that's at risk. Mm-hmm. So in terms of the backwardation, I don't think this has been fundamentally driven. If you think about it, we are coming up to refinery maintenance now. It's seasonally the weak period. So if anything, the backwardation at the front should ease, and it should really be those deferred spreads that move up. But what we're getting is the difference in flow, that because the producers are kind of hedging the back and the speculators are buying the front, you've got that steepening in backwardation. If before this event, we were expecting the backwardation to ease off in the coming weeks before, of course, it tightens again as refineries return from maintenance.
Really, really, really great distinctions for the intricacies of the market. On this point, though, are we noticing anything within differentials of oil crude, considering that if we see any sort of heavy crude being held back, that's really going to wind up hurting, say, Asian buyers? That's already being hurt by, say, Venezuela not being able to produce. Have you noticed anything intricate on that level?
Yeah, absolutely. I think one of the things, and I mentioned this to Tom Keene as well on Friday, was that the real risk is that if Iraqi production anything from Iraq that's lost. It's really those heavy barrels. And Iraq is your last source for heavy incremental crude, right, after Venezuela and Iran are off the market. What we have seen in Asia is, even though refineries are heading into maintenance and we should see a softer crude market, we are seeing those sour crudes, the medium sour crudes. Oman, for instance, has really picked up the differentials there. So yes, absolutely. I think refiners, and this is what ends up happening, right, when geopolitical tensions rise, refiners will preempt and stockpile just in case there is an outage in the future. So you're definitely seeing some of these sour crude values go up, even though you wouldn't expect that at this time of the year.
Hence that backwardation we're talking about. So to round it out here, as you talk to your sources in the Middle East, of which you have many, what is Saudi Arabia thinking / doing right now?
I think right now it's wait and watch mode. The next step is, of course, you've already heard and seen what Iran has talked about in terms of the JCPOA. But I think the next step very much is going to be for them to see, look, on the one hand, fundamentally, the market is weakening, refinery demand is coming off. But should there be a supply outage, Saudi Arabia will be ready to act. But they are not pricing or factoring that in. And I don't think we are either, in terms of, we absolutely don't believe that's going to be necessary. But of course, they are going to be ready, and if required, they will have to tweak their production because obviously they've decided to cut production even further.